Hello, today is the 2nd of March, Monday, and I think it's important to tune in right now and point something out. And today's lesson is actually about the discrepancy between news and price behavior. So obviously this Monday is the first Monday after the weekend during which the war between Iran and the States and Gulf states have erupted, and it's bad news. Obviously, it's bad news, and the first market, which was supposed to reflect it, was Bitcoin and the rest of the space, such as Ethereum. But what happened there is the price did not follow through to the downside, despite the fact that we've been in a prolonged bear market since October 25 for several months now. And I actually was at the bearish side. I was expecting total obliteration of this domain, and I was actually short Solana here, and this short didn't work out, so I got stopped out and stepped out of the way. But that was the first sign by itself. The price declined to go further down, despite the mounting informational pressure. And obviously when the war itself started, as I've said, it was supposed to capitulate, and actually there were attempts to do so. But even on Sunday, yesterday, when it became obvious that the war, the conflict, the operation, whatever you prefer to call it, will not take one weekend, and some people pointed that out as a potential problematic scenario, like quote-unquote prolonged conflict. Despite that fact, and despite the fact that the Hormuz Strait, I'm not sure that I'm spelling this in the correct way, but that sea oil logistics hub was about to be blocked, and tankers are being hit, and that was supposed to lead us to the supply crunch in oil. Despite all that, not only did not disintegrate, I'm showing you Solana now, but you can also look at Bitcoin, because lots of them are pretty well correlated. It actually made higher low, and that means that despite all the negative news, lots of buying power was still in this market. So, and this correlation, this negative correlation, is one of the absolute classics of the markets. These axioms baffle people. They cost a lot to learn. So this is a great example, and also a great example for me to remind myself of what could happen in the market and how it actually fools people. So, and today, what are we seeing today? Today we actually see, I wouldn't call it an outright breakout attempt, because in order to formally break out, Bitcoin should clear maybe these highs, 70,000, and after that we could maybe expect a relief rally to the declining 50-day at the very least, or maybe to this point. That is the top of the previous consolidation. So that's a good contrarian thing to study. And since we're talking right now, what concerns me a bit is the fact that these guys do not break out. I mean, the new themes in the market, such as Aster, such as Hyperliquid, which is that this one is not near its highs and it doesn't even have a proper buy point, because this is actually not so good. This is expanding ranges, and usually this behavior, this erratic behavior, is considered as absence of institutional interest. Both of these, Hyperliquid and Aster, are on-chain exchanges, the most important theme of the market, the one that will most likely lead the market should the next and when the next true market cycle will arrive. So no breakouts here. No breakouts in Aster, no breakouts in Hyperliquid so far, although obviously it's acting strong. Maybe it's in case of Hyperliquid, maybe it's the consequence of loose distribution of tokens, obviously, because there is no procedure for IPO, and you can get creative with those. So maybe that's the reason behind such price behavior. On top of that, we don't see proper buy point and the breakout in Midnight Protocol, which is the new privacy protocol, I'm sorry, in the larger privacy theme. And the privacy theme is very, very timely because of the increasing quote-unquote adoption / control, institutional control over decentralized finance. And same is true for Aztec, another competitor in this growing field of privacy protocols. An audible mention is XMR. This one is obviously, it's not new, and I've traded it, and I'm watching it because for me personally it is like the most established name in the space, and it's still near its all-time highs. And this correction was like just sales, capitulation, no consolidations, almost zero consolidation, and that could lead to sort of a V-shaped recovery here. So that's why I'm watching for this one as well. So the absence of these breakouts is a bit of a cautionary sign that could point in the direction of a relief rally and not a true bull market in the space of whatever you call it, Bitcoin, DeFi, alternative finance, new finance, whatever. And since we're talking, it's important to mention that Coinbase is, even if you don't trade stocks, obviously you can trade this one, Hyperliquid, but it's a very reliable predictor for what's about to happen and in the space of coin. You can see that it has bottomed in February, in the first half of February, and it was crawling to the upside since then, and that was another case of a reliable prediction of this indicator. And since we're talking about indicators, we should also take a look at USDT dominance. And here you can see, if you follow my tweets, you see that I've outlined this scenario. And this scenario actually, it was a bearish scenario. We can't do bar replay, whatever. I outlined it here. It was supposed to contract and expand afterwards, and maybe test these new highs, and that could be the conclusion of this bear market. But that wasn't the case, and you can see that now it is retreating, and the whole structure becomes a bit disorderly. It was expansion, contraction. Now it's instead of a directional move, it sort of becomes these I think Mark Minervini calls it megaphone action, like the volatility, price volatility expands with without direction, and this is sometimes a sign of a top. So that could be another good indicator for the market, because this expansion after this contraction was a very reliable sign of weakness in this market. We also see strength. Let's talk about stocks too. So we here we see that basically nothing is happening in the world of stocks, and the chop continues here. It's choppy, so that's why I'm a bit cautious. No resolution to the downside, which is quite a bit overdue, I think, and obviously no upside so far, but no collapse. And what's interesting too, I was seeing this selection of words like collapse, what else, crash, and something like that, dramatic choice of words. And when you couple that with the contrarian indicators like fear and greed, it was and if you take into this equation price strength, it was a very high probability situation for at least a relief rally in this market. So that's an important thing to mention. If we go into the market of stocks, and we'll see that this wedge or this neckline in NVDA is still holding, but we do not know yet what's about to come, because the war goes on. And here it doesn't look that optimistic, like Bitcoin and the rest of the space. Could very well contract here and actually pierce this line and proceed to the downside. And there is another hint for that scenario here, and it is SanDisk, and it's weak today. So, and we also see that the 50-day line is approaching, and maybe we will see my first setup coined exclusively by me. At least I didn't find any mentions of it, and it's my pure research, that 50-day moving average catch-up scenario, in which 50-day moving average catches up with the asset, and it fails to rally, and that means that the stock is basically the stock or a token is being abandoned by institutions, because they often use this reference line as the line to when they are supposed to be in the market supporting their positions, and if they do not show up, correction ensues, and sometimes it's quite fast. This could be maybe a good example. This part, but sometimes maybe not the best. Maybe I should make another video, especially for this kind of setup, because sometimes it's faster. Sometimes it just needs to catch up with price, and down we go. So, what else? You can also see that oil is not that strong. And there is a play of fundamental factors here, like long-term oil is extremely bearish because of China's decision to get off it. You can see that there is no gap up, and I was suggesting yesterday's on Saturday, I was suggesting that it's a shortable situation, and indeed it is. Like, if you're not afraid of this extreme political volatility, you could try situations like this. Not for me, obviously, but still tradable. And we also see that oil, gold, and silver commodities are quite weak, so defensive plays, so to speak. The main takeaway for today, I'm not suggesting that if you don't have any new positions, you're supposed to run in and just start buying stuff. the best way, unless you are a back holder, and this is a welcome relief for you, this could be viable, but in my opinion, maybe it's a bit too early to rush in, and there are too many averages, too many variables, I'm sorry, in this equation so far. But as I've said, a relief rally to this declining 50-day moving average is quite likely at this point. I have some longs, and I won't point them out. I'm up for the year because of the XMR trade, and I also butchered some good trades, like my short in Solana, which was supposed to take place here, and I closed it the next day. So I'm a bit cautious. I want to get back in sync with the market, and I also have a very important task of learning scalping, intraday trading, like bread and butter trade. Oh wait, the trade you're supposed to take when you wait for these opportunities that take months to shape. So that's my goal for this year. Anyway, keep the contrarian standpoint in mind. Be safe. Bye.